weaker than expected second quarter profit from Samsung added to concerns about a flagging demand for high-end smartphones. Hello and welcome to Friday's press review. I'm Elaine Stensonn. The world's largest smartphone maker faces more profit outlook downgrades after their overall earnings missed estimates. The South Korean company forecast of 9.5 trillion won in operating profit for the April-June quarter would be a record, but analysts had expected more than 10 trillion won and shares in the firm lost more than 3%. This figure is weaker than expected as slow mobile sales combined with hefty marketing costs for the flagship Galaxy S4 smartphone have contributed to this. As the S4 isn't selling as strongly as had been forecast, several brokerages have downgraded Samsung and their earnings forecast for the company. Lee Jin-woo from KTB Asset Management Company says the market's viewpoint needs to be lowered. Having missed that 10 trillion won number proved that the recent concern over the high-end smartphone market saturation and margin squeeze was for real. The S4 was released in April with a bigger screen and new software as Samsung tried to compete with the iPhone 5. Sales in the April-June period were expected to reach 57 trillion won, up 19.8% from the same period last year. JP Morgan Chase revised its sales estimate to 60 million units this year from 80 million, and Morgan Stanley lowered its forecast to 61 million units from 71 million. Bayan Hang Jun from KP Investment and Securities said, "It sharply missed the market expectation and that worries me. The market was initially concerned about the third and fourth quarter results, but today's news raises questions if the earnings are already in bad shape." There are concerns that the smartphone market may be slowing down. Neil Mostyn, Executive Director of Strategy Analytics, said, "Apple is suffering from iPhone fatigue while Samsung is suffering from Galaxy fatigue." Just before the launch of the Galaxy smartphone, Samsung had lost nearly 19.5 billion in market value. Investors are concerned that the company relies too heavily on IT and mobile business, which accounts for more than 70% of its operating profit. And that's all from our press review for today, but we will be back next week with more exciting market news. Bye for now.